All right, welcome back to another one. This video, we're going to talk about taxes. That affects everybody. All right, so we're not going to go too in depth in taxes, but we are going to talk about the marginal tax rates and the basics of how your tax bill is calculated. So let's get it. All right, so this problem is presenting a scenario. We're going to answer the questions in this scenario as well as build upon this, talk about a few different things regarding your tax bill, and talk about how your taxes are calculated using the marginal tax rate. All right, so the situation we're presented with is Isabella is a head of household. She has earned wages of $84,250. She also received $4,100 in interest from a savings account. She's contributed $6,800 to a tax-deferred retirement plan and has itemized deductions of $19,600. Find the gross income, the adjusted gross income, and taxable income. And then we're also going to take this chart that you see on your screen, and we're going to actually calculate what her tax bill would be given this scenario, assuming there's no tax credits and things like that, to help you understand how taxes are calculated using these marginal tax rates. All right. Okay, so to find Isabella's gross income, now your situation may be more complex than this, but given the situation we have, gross income is going to be basically all the money that is coming into you, your earned wages, interest in this case, things like that, where you have brought in money. Money has come into you. So Isabella, to find her gross income, she's going to take her earned wages. If I can circle it. Her earned wages of $84,250, as well as what her savings account has given her in interest. So she has earned an extra $4,100 on her savings account. So she needs to include that in her gross income. So we're going to take that $4,100. We're going to add that to the $84,250. So when you add $84,250 to $4,100, you will get a gross income of $88,350. All right, so there is Isabella's gross income. Now we need to find her adjusted gross income. So the adjusted gross income comes from taking the gross income and subtracting any contributions you have made to retirement accounts or any other tax-deferred plans. So if we read through our situation, we see that she contributed $6,800 to a tax-deferred retirement plan. The $6,800 is going to be subtracted from her gross income to get her adjusted gross income. That's the only thing she has contributed into a tax-deferred plan. So her adjusted gross income is going to be the $88,350 in gross income minus that $6,800 in her tax-deferred retirement plan. And so when you subtract $6,800 from $88,350, you will get an adjusted gross income of $81,550. Boom. So now we need to calculate the taxable income. Drop my pen. What a taxable income is, it's your adjusted gross, so what we just found, the $81,550, minus any deductions, okay? So you do have to be careful in calculating the deductions, okay? Most people do take the standard deduction, but some people itemize deductions based off your particular situation. If you're a business owner, whatnot, you may itemize your deductions. And so whenever you're choosing between the standard deduction and itemizing deductions, always take the larger of the two amounts because that's going to reduce your taxable income. So your taxable income is your adjusted gross minus deductions. And so if I look here, if I read, Isabella has itemized deductions that total $19,600. If you look at the chart for a head of household, right here, the standard deduction is $18,800. So she will choose to itemize her deductions because it's the larger of the two amounts. And so when she takes her itemized deduction amount of $19,600 and subtracts that from the $81,550 of the adjusted gross income, she will get $61,950. Boom. So now what we want to do is calculate her tax bill. Now this is kind of basic. I want to show you how to use these tax brackets, these marginal tax brackets, because there is sometimes a little confusion how to calculate taxes using these marginal tax brackets. And so let's take this example and let's actually calculate what her tax bill would be, considering there's no other, let's assume there's no other tax credits or tax deductions. Let's just, on this $61,950 taxable income, let's figure out what the tax bill would be. Now, we do want to consider her situation. She is head of household, so we only need the head of household column. So let's go ahead and take away the other two columns and just look at the head of household column. Okay, so we've taken away the other two columns. We're strictly looking at this head of household column. So let me show you how to calculate taxable your tax bill. So what you want to do, if you look very carefully at these tax brackets, it tells you that the tax rate up to $14,200 is taxed at a 10% rate. So being that her taxable income is $61,950, please don't make the mistake of thinking, okay, well, $61,950 is here, okay, and calculate 22% of that, because that's not how taxes are calculated. Taxes are calculated based off the brackets. If you look very carefully, the first $14,200 of this person's, Isabella's, taxable income is calculated at a 10% rate, okay? So only 10% of the first $14,200 is taxed, okay? So let's calculate that. Okay, so if you calculate 10% of $14,200, you'll get $1,420. So now we want to calculate that. That's not her tax bill. That's just the first $14,200 taxed at 10%. Now, if you look very carefully, the 12% bracket is up to $54,200. But we've already been taxed on the first $14,200. And so the amount between the second threshold, which is $54,200, and the first threshold, which is $14,200, only that amount is taxed at a 12% rate. So we need to find that amount. And so to do that, we're going to take $54,200 and subtract $14,200. Let's get it. So when you subtract the $14,200 threshold from the $54,200 threshold, you get $40,000. Only $40,000 is taxed at 12%. So let's find that portion of the tax bill. So 40,000 times 0.12 is $4,800. Now we're still not done yet, because remember, her taxable income was $61,950. So we have to find out where that fits in, which it does fit into the third bracket. However, at this point, we've already been taxed on the first $54,200. So now we need to find the difference between her taxable income, which is the $61,950, and the second threshold of $54,200. And only that amount is taxed at the next bracket of 22%. So let's find that amount. Okay, so $61,950 minus $54,200 is $7,750. Only that amount is taxed at 22%. So let's find out how much that is. That's $1,705. So now all of her taxable income has been taxed. So you're going to find the total here. You're going to add these three numbers, and that will be her tax bill. So let's add those numbers and find out her tax bill. So her tax bill is going to be $7,925. That's how much she owes in taxes based off of her scenario. Now, this does not take into account if she has tax credits and things like that. So this is strictly on the head of household situation, earned wages of $84,250, receiving $4,100 in interest from a savings account, contributing $6,800 into a tax-deferred plan, and then finally taking the itemized deduction amount of $19,600. So given different scenarios, hopefully now you can calculate your tax bill. Of course, this is more of a basic situation. This is her tax bill. So she's probably already paid most, if not all, of this tax bill throughout the year of paying taxes per paycheck. If she's paid more than this amount, then she'll be able to get a refund for a little bit of money back. But this is her tax bill throughout that year of work. All right. All right. Whether you're in a class or you're just curious about how marginal tax brackets are calculated, I hope this video helped. I've pulled up the complete tax brackets. So the situation we looked at, Isabella was filing as head of household. But if you look at the other three columns, there's a single column, married filing jointly and married filing separately. Let me duck my head. Notice there are differences in the thresholds in each of these categories. So take a similar example and see if you can calculate tax owed given a certain taxable income. So I hope this video helped. If you have any questions, let me know in the comments. If not, see you in the next one.